right, look, hear me out. I know things look atrocious right now and everyone is calling for a bear market, but I'm actually feeling really positive about the market. And in this video, I'm going to explain to you why. Maybe not today, but I think soon things are going to be really quite good for quite some time. So if you're feeling a little uncertain, if you're anxious, if you're even just straight up spooked by all the doom and gloom that's being circulated right now, this is going to be the video for you. So if you're new here, welcome. If you're returning, welcome back. I'm Annie and this is Trade, Travel, Chill. Be sure to hit that like button nice and early and hit subscribe if you're not already subscribed so that you can keep updated with the market along the way. I'm always trying to be as forward looking as I possibly can, even though I'm a day trader. Having this higher time frame macro perspective allows me to exploit the market on a daily basis. So if that's something you're wanting to do, then this is the channel that you are going to be wanting to watch for that. So hit the like, hit the subscribe, and let's get into it. Now, there is a lot of talk out there that we're officially in a bear market, but is that actually true? You know, we are in this pullback and we do see many pullbacks along the way in a bull market. Today, what I'm going to do is I'm going to look at what the data says, what's happening globally, and why I believe this could be one of the best opportunities of the rest of this cycle and not necessarily a time to panic. So let's get into that. Let's start with the elephant in the room. There's been a big wave of fear-driven sentiment over the past few days, headlines about bear markets, markets collapsing, global equity collapsing, trade wars, gold flying, and Bitcoin facing a death cross. Like, there is a lot. And look, I get it. There's plenty of reasons to be cautious. And I do think we need to be cautious, but I also think we really need to zoom out. So speaking of zooming out, first off, let's take a look at an indicator called the Bollinger Bands. Now, I don't use this indicator personally in my trading strategy. However, I do know it very well. And I can tell you it's really being misused right now. Now I'm going to go down to the daily time frame for this, and what we're looking at is the Bollinger Bands currently. So it's this red one here and this green one down here. This is the Bollinger Bands on the daily time frame, and what we're seeing right now is this contraction happening through here. Now what this is showing us is low volatility and contraction, as I said, but that's not necessarily bearish. Historically, periods of low volatility often precede major breakouts. Now that breakout can be in either direction. And right now, the market is simply coiled up. It's not a sign of weakness. It's a sign that a big move is coming. So you can't really use just Bollinger Bands alone to make up your mind. Right now, it's still within the two bands. It's heading to the bottom band, and that sometimes can act as support. You'll see here it acted as support and we bounced up, wasn't able to break the top Bollinger Band and came down. Here it acted as support, and a lot of the times, if you look back over the daily time frame, you'll see it does act as support. Actually, if we go back in time, look through here, this big beautiful W formation that we got, where the Bollinger Bands were also contracting on the second side of it, and then that ended up leading to our big push up. Do I think that's going to happen right now? Potentially not, but this isn't an indicator. Just because the Bollinger Bands are tightening, it's not an indicator that we're definitely bearish and we're definitely going down. That is where I think the Bollinger Bands are being misused. Now, second of all, let's have a look at the weekly 50 EMA. I'm just going to adjust some settings here because that's another one that people are talking about. And when we have a look at the weekly time frame for Bitcoin, you'll see that we've had one candle that has tested the weekly 50 EMA so far, and we had a small bounce off it. It's not very good bounce. We would have liked a much bigger one, but this does technically count as the price holding the weekly 50 EMA right now. So we're just hovering around it. Like, we haven't definitively broken it to the downside at all. In fact, we haven't broken it at all. So it's acting right now, or it's attempting to act as a support. And if we do bounce from there, that could end up being a pivot. It could actually mark the final push of the current cycle. So we can't really get ahead of ourselves and anticipate that it's definitely going to break when it hasn't done that yet. Now, another thing that I see a lot of people talking about is the death cross on the S&P and the NASDAQ. So let's take a look at that. First of all, the death cross, I don't like EMA crosses, especially when the EMAs are a high number, because they're a lagging indicator. So a death cross doesn't mean more downside. It happens after the downside has already happened. So the trend is well and truly before you will see a death cross, and that's why I don't really find it a very good strategy. So when we have a look at the S&P here, for example, we haven't crossed yet, number one. So this here is the 50 EMA, the blue one, and the yellow is the 200 EMA. So if they cross, that is the death cross that everybody is currently warning about. But as you can see, the trend had already started, and this top here was something I was signaling you guys and warning you guys about a lot on this channel back in February when it was forming. Something else that does look bearish on this currently is the fact that we did break down below the 50 EMA and we have retested it. So I'm not saying it's not bearish, but I am saying that by the time, if this actually does complete a death cross, most of the move to the downside would already have happened. If we go back here to 2022, you'll see here, this was a death cross right here. And so if you measure out that drop, it was already down 12% before the cross actually happened. And then from there, once it had happened, we had a further 12%. So half the move was already done in that death cross previously. And the same thing here. Now, listen, this was COVID and it moved really, really fast. So it's not really the fairest debunking of a death cross. But look, the death cross happened here and we were already bearish prior to that. By the time the death cross candle actually completed, it was this one down here. So we were already down 30%. So yeah, the death cross alone, I mean, if anything, it's a signal that most of the damage is done and to start looking for something else. So yeah, like I said, we don't have it yet on the S&P, and I'm pretty sure we don't even have it on the NASDAQ actually just yet. No, it's looking close. Now, look, they both look very similar in the way that we have had our 3 hits to the high, we had the drop, we had the retest, but that's a different trading strategy. That's our trading strategy. That's the TBD system. So that's a whole different story. But if we're talking just about the death cross alone, even with all of this bearishness, it hasn't even actually crossed yet. So by the time it does, most of the move is already going to be done. So yes, the death cross does validate existing weakness, but it's not really predictive on its own. There are many other trading strategies that will help you to understand when a trend is reversing well before death crosses. The next thing I want to move on to is I want to go around the globe real quick and I want to talk about some other things that are happening in the world that is leading people to be bearish right now. One of those things is Chinese tech stocks dropping. And right now, I personally feel like that is a correction. It's not necessarily a crash. So this is a Chinese internet ETF. It focuses on Chinese internet and tech companies, providing a comprehensive view of the sector's performance. So as of today, the KWEB is trading at $35.04. It's down 3.12% from the previous close. Like I said, it's a correction. It's not a crash. And if we go and have a look at the Hang Seng is a tech index representing the 30 largest technology companies listed in Hong Kong with significant exposure to technology themes. So Chinese tech stocks have been underperforming for a while. It's due to domestic policy, quite frankly. And we can see that this is currently down 2.03%. So what about Japanese equities? That's another thing a lot of people are talking about. In general, these are down, yes, but Japan has been overextended for months and a healthy pullback is overdue. And I mean, it's likely unrelated to crypto sentiment, let's be honest. But this one here, so this is iShares MSCI Japan ETF. It's an ETF that provides broad exposure to Japanese equities. It reflects the overall performance of Japan's stock market. So as of today, the EWJ is down, 2.02% from the previous close. And then if we move on, let's go have a look at the Nikkei, which I think I have this chart here. Now, the Nikkei is Japan's premier stock index. So it includes 225 large publicly owned companies listed on the Tokyo Stock Exchange. And yeah, that's down too. But again, look, this one does have the death cross actually right here. But you can see before the death cross happened, we were already down using the TBD system. system. It has broken down below the 50 EMA. It has retested it, and now it's making its next leg down. So most of the move may already be done. We can also see here it had, like, this is what I would count as a crash. We've had that before, and it's likely that it's just coming back to revisit that area. So we need to keep an eye on this, but it actually perfectly matches up the area of interest to a previous unrecovered vector, which is this green one right here. When we had the crash, it spiked back into it. And because that's such a fast move out, you often revisit it, but it can also just hold EMAs. So we need to keep an eye on this one. But yeah, it's not good now, but it could be potentially setting up for something really good, especially considering there is so much fear in the market. And like I said earlier, I'm not saying today, I'm not even saying this week. It is possible that there's a pivot this week because, as we know, Trump has his tariff deadline thing on the 2nd of April. That could cause a midweek reversal because that's on Wednesday, and a midweek reversal is part of the TBD system. So if you know it, you're looking for news events that would line up midweek that would give you a potential trend change. Now, if it doesn't happen then, you know, it's possible that we get our final liquidity washout, which would be great, and it would be scary in the meantime. But often those liquidity wipeouts lead to a change in trend, and that could potentially be within the next couple of weeks. You know, we have to wait and see. You can't time it. You just have to wait till they're ready to do it, really. But let's take a look at gold as well, because gold is hitting an all-time high, and that's kind of freaking people out too. So when we have a look at gold right now, it's just straight up and to the right. You know, this is kind of like, this is what we wanted to see in our bull market with our altcoins. It's not happening on them right now, but it is happening on gold. And that's a natural response to geopolitical uncertainty and inflation expectations. It doesn't mean people are fleeing from risk. They are right now, but doesn't mean that everything is completely over. No, it's just this is what's happening now in the moment. So the thing to know though is gold can coexist with a strong crypto move, especially as Bitcoin is now seen as a macro asset. So what else have you got for me? Like, what else do you want to throw at us that is going to make us super bearish so that we miss out on the next opportunity? Let us talk about Goldman Sachs. Now, Goldman Sachs has recently revised the probability of a US recession within the next 12 months from 20% to 35%. So the adjustment is attributed to factors such as declining business and consumer confidence, weaker economic fundamentals, and concerns over increased US tariffs. And again, that has the market just a little bit shaken up. But if you actually follow the property cycle, the 18.6-year property cycle, we're expecting that over the next 12 months anyway. And if you want to know more about that, I highly recommend one of my friends here on YouTube. You would already know him. If you know this channel, you also 100% know him. Jason Pizzino on YouTube talks about the 18.6-year property cycle a lot. Highly recommend you look into that because it will calm down some fears. And actually learning about that myself has really got me excited for what is to come over the next couple of years. I'm going to do a video on that and explain it to you. It's not going to be a traditional technical analysis video. It's just going to be a video of how I plan according to that. So look out for that one day. I don't know when I'm going to do it, but when you understand these cyclical things, you're prepared for this anyway. Now, on that note, before we go any deeper, if you're feeling overwhelmed and you're not sure how to trade this market, now is exactly when you should get that support. So inside of our TTC community, we're not just sharing real-time setups, but we also share the macro data that helps us stay ahead of moves like this. You may not be aware, I have recently introduced a lower cost membership that still gives you full access to our courses and market updates, so you don't have to go it alone. So if you've been sitting on the fence, this is your sign to get the assistance that you need. All you need to do is tap the link in the description of this video, and that's going to get you access to learn about our memberships where you can get the support, the clarity, and get the help to navigate the phases of this cycle. So trust me, I think in 2 weeks' time, if you take the step, you will definitely thank us. And don't forget, we do have a 48-hour money money back guarantee. So there's no risk to jump in there, try it out, see if you like it, see if it resonates with you. Now, I'm sure you want me to go and have a look at the Bitcoin price action. So let's go and do that. I'm going to start on the daily time frame. And yes, it doesn't look great. But one thing I've been saying to you guys for a long time on this channel is it's not a bear market unless we actually break below our prior resistance here before the breakout of about 73K. We haven't done that yet. It's possible we come back down to retest it, and that's going to be a very, very important zone to hold if we do come down there. But there's also a chance that we don't come down all that low, because on the daily time frame, we do have this vector right here, this blue one. So far, price has tapped into it a couple of times. Now, the more times price taps into it, the weaker it does get. So considering this move down here almost went to the bottom of it, I will dare say that should we revisit the bottom of it again, we may break down below it this time, but there is another vector right here, which is going to be at that resistance retest area. So what we're actually looking for right now before we worry about this zone, which to be honest, like if it held there and it gave us a strong bounce, I think that is the best buy you're going to get for the rest of the cycle. But there's no guarantee it's going to come down that low. So you just got to be careful about, not buying because you want a cheaper price and then the price takes off and then you miss out altogether. So we're watching this zone first for signs of a change in trend. And if we don't get it, we know we've got a lower level that still doesn't at this point in time invalidate the bull market. So what we do have here on the daily time frame is we definitely have our M formation. We've got our breakdown, we've got our retest, and we've got another breakdown, and we've got another retest. So we really are waiting around this zone to see, is there one more drop to come into maybe that 73K region, or is this price action right here going to end up forming a W formation? Now, if it does, that leads to a trend change, meaning we will have resumption to the upside from there. But I don't think that will happen without the presence of a positive news event. So that's why I said to you, 2nd of April is a key date. The lower time frames are going to show you if that date acts as a pivot. And if it does, that's going to be your time to play full out now, because that is going to be the last phase of the cycle, which I believe will go for potentially up to 3 months. I'm not thinking we're going to the end of the year at this point in time. Save that for another video as well. Now, if we don't get the good news, it could give us that third level down to retest this prior resistance. Do you see now how either way, both are positive for a trader like me? Both are positive, because if I get my pivot here, I'm going long. If I don't, I'm going to expect it here, and that's where I'll go long. Now, I always wait for final confirmations. So I'm not saying I'm definitely buying. I need to wait for my final confirmations, and I will be trading that in the community with my community. I tell them every day, you guys day trade. I've got a full team of traders in there. They day trade with them all the time. I'm hunting for this bigger, higher time frame move for my whole community. I want us all to get it, and I'm staying super focused on that right now, because if we actually do get our final leg of the cycle, that is going to be the best entry we can possibly get. And the fact that everyone is turning so bearish and calling it a bear market now just even more makes me want to focus on it. Now, what would make me give up on the idea that we're going to have a third and final phase would probably be breaking down below that resistance and not able to reclaim it. So we'll worry about that when we get there. Now, I don't have to worry about altcoins personally, because as you guys know, I sold out of most of them in January, and I'm only trading them short term. So if we have a bounce, fine, that'll be a new 3 to 6 week altcoin trade, but I'm not looking to build portfolios at this phase of the cycle. The final phase of the cycle is the taking profit phase of the cycle. We're looking to sell off the things that we own and take our profits, which again, in this cycle, I think is so important, but that's a video for another day. So make sure you like and subscribe, because I've got so much to share with you. We are going to build so much epic wealth over the next 2 years. You guys have no idea what's coming. You have no idea what is in this brain of mine that I cannot wait to share with you. So get excited about these moves to the downside. They're just an amazing opportunity to build wealth, you know? And all we have to do is just keep our eye on the prize and just make sure when it comes that we're alert for it and we get that pivot, and then we take our profits when the time is right. Now, that's not a rant I was meant to go on. So let's just have a quick look at the 4-hour time frame. So this is the retail bear flag. I covered this on prior videos, so I won't go over it again. I'm still just waiting for it to play out even more, to be honest with you. This on a 4-hour time frame could be the formation that forms that higher time frame W. So what's going to make me think we're getting that and we're not actually going down to the 73 would be if these trap traders down here in this 4-hour candle remain trapped. So we're allowed to bleed down a little bit more. Actually, the more we do bleed down, the better our position is going to be, the better our risk to reward, just everything will be better. So I'm really not afraid of that, but I would actually like to see this continue come down a little bit more, somewhere between, like, let's say 80K to about 78K. That would be a really good buying zone, providing we hold there. So if we get back down there, like I said, I'm going to be trading that with my community. We will know if we get the right pivot according to reversal signals that we look for on lower time frames. But this is the area to look for that upcoming change in trend. And if we get it, we act. If we don't, we know we're expecting this move further down to at least retest the prior resistance. Now, aside from price action, we do have some significant news events this week, and we need to be aware of those. As I've mentioned earlier, we do have on Wednesday, the 2nd of April, it's being called Liberation Day by some, as the Trump reciprocal tariffs officially take effect. So the big question here is, markets have already sold the rumor. Will they buy the news? Will they give us that midweek reversal? Sometimes once news is official, the market rallies. So that is something we really need to watch closely midweek. In other news this week, we do have on Friday the non-farm payrolls. Last month we saw unemployment tick up. If that trend continues, it could pressure the Fed to cut rates sooner than expected. Right now, the markets are pricing in a 25 BPS cut in June. Also on Friday, Chair Powell speaks. What he says could either reinforce or reverse the trend. So it's always a market mover lately, especially after NFP. In other news this week, we do have a lot of actually daylight savings time shifts, so just be aware of that. But on Tuesday, we have ISM, PMI, and JOLTS likely to spark volatility. On Wednesday, we have ADP employment, but it might get overshadowed by the tariff impact. On Thursday, we have ISM services, high chance of causing movement, according to our macroeconomists that we have inside of our Discord. And on Thursday, the US unemployment claims hasn't been moving the needle lately, but it's always worth watching. Plus, not to mention, with all of that, today is the last day of Q1, and that often brings repositioning flows. So be alert for unusual market behavior as institutions wrap up the quarter. Now, guys, if you are actively trading, make sure you're doing it smart. I've partnered with LBank Exchange to offer you guys a 20% trading fee rebate for life. There's no catch. All you need to do is sign up using the link in the description of this video. Lower fees means more profit, and LBank have been pretty super solid during volatile weeks like this. All right, that is your Monday market breakdown. I hope this helps shift your mindset from fear to focus. Yes, there are challenges, but we're not in a confirmed bear market just yet. And in my opinion, this next bounce really could be the one. So stay sharp, stay informed, and most importantly, stick to your plan. And even more importantly than that, if you want someone to help you navigate this cycle, hit that subscribe button if you have not done that already. Leave me a comment below because I really need help to outdo the bots on the internet. And I'll see you guys on the next video.